Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, October 16th, 5:27 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, uptrend since the 10-6 O'Neill follow-through day. On Friday, we had fading uptrend on here after really a tough day in the market, but the market seeks to fool the masses. And just when you think the market is going to zig, it very often turns around and zags, and vice versa. And that's what we got between the follow through day on 10-6, the action on Friday 10-13, and today's action as the market just made the sell off on Friday look like it was a 1 day occurrence. And there are still plenty of crosswinds, headwinds, tailwinds. The market has some things going for it, some things going against it, and some things just blowing sideways that vary from day to day. And our job here is to try to navigate through those, and that's what we'll do in this video. Check the trend gauge over here. Leadership, we took the red sub arrow off. They're still neutral. Going through hundreds of charts over the weekend made me change my demeanor somewhat from the close on Friday. Maybe it was just seeing a couple of big leaders down 6, 7, 8% on Friday, but a lot of them bounced back today. Most of them, in fact, did. And all in all, plenty of leaders holding up just fine normal pullbacks. That was one comment that I made in Friday's videos, that from a Fibonacci standpoint, we hadn't even retraced half of the move up. So you got to give the market the benefit of the doubt from that standpoint. Still didn't like the leadership, the action and leaders, or the big seven on Friday, but call it the comeback kid today, call it whatever you want to. But it's nice to see the uptrend resume. And really, we're just consolidating over the last 3 days. The 4 day up move off of the lows. It'll become apparent when we look at the charts. So short term, we're still mixed here. Dow regained the 21-day moving average today. So did the S&P 500. NASDAQ 100 firmly above, mid and small still lagging. Medium term, NASDAQ 100 lost the 50-day on Friday, but regained it today. Long term, the Dow regained the 200-day moving average today. Good sign there. Other big cap indexes, the NASDAQ and S&P, are above their 200-day. Small and mid cap continue to lag. So what happened today? Well, despite higher yields, we saw a broad rally, growth rallied, value rallied, high beta rallied, low volatility rallied, small, mid, and large rallied. And you can see by the green there what the final numbers were. Definitely a good day for the market and a good bounce back after the action on Friday. Broad rally despite yields up. S&P 500, NASDAQ, and the Dow all regained key moving averages. Here are the final numbers on the day. Big 7 up 1.34%. Our 8 growth ETF composite bouncing back up 1.5%. S&P 500 gapped up 0.45, rallied quickly the first couple of hours. One shake midday, but held the gains up 1.06%. NASDAQ 100 up 1.13. Dow up 9/10. Mid caps up 1.6. Same with Russell 2000 small caps. Global 60/40 up 0.36. Dragged down by bond prices, meaning higher yields. In-house GROTECTION gaining back most of Friday's losses, up 1.01%. We'll hit the tail of the tape and of course all the charts. Let's get right into the key levels. And what you see here, if you take a step back on a 30-minute chart, is that there is a trading range since we had the follow through day. Here's the follow through day, and here's the top of the range, 43.80 to 43.85 ish. Here's the first day up. We got up to 43.24. Consolidation day on Monday morning, the 9th, that made a higher high. Then a higher high on Tuesday, a little bit of a pullback. Remember, there was a bond yield freak out on Tuesday. Then Wednesday, we sold off but closed strong. We were acting great on Thursday, another bond yield freak out, but a decent close. Gap up on Friday, and then just a terrible day Friday. Peaking early and selling off Today, gap up, low in the first 5 minutes. That's good stuff. Up to this 43.83-ish level. Really, it's 43.80 to 43.86, I guess you could call it. And then we just kind of bounced around there all day. One attempt at a sell-off. This had to do with some reverse repo headlines hitting the market, but the market recovered, uh, unlike the way it recovered last Tuesday and Thursday from the bond auction freak out. So basically, what we're looking at right now is a 1, 2, 3, 4, 5, 6, 7 day rally. 2 days, third day up, we made the high, and we've just been consolidating ever since then. So call the range 43.12. That's yesterday's low, Friday's low. 43.86 on the upside, and this is what we'll keep an eye on. Let's go to, and you can see on the daily chart here, undercut the green line, that's the 21-day moving average. Also the purple line, that's the ADMA, but regained both of them today. Now what we're coming into above that 43.86 level that I mentioned is another 14 points up to the 4,400 level where we've got this declining red line. That's the 50-day moving average. That's also a gap fill from the gap down the day after the most recent FOMC meeting. Let's move on to the NASDAQ 100. Similar type story, 7-day, didn't undercut. Uh, so didn't undercut here. That's what kept the rally count alive and the ability to have the follow through day off of day four, after day four on the NASDAQ 100. And this has been showing relative strength, not on Friday or on Thursday, but it regained it today just barely, but undercut the 50, bounced at the 21-day just the way we needed it to, regain both of those moving averages today. So good stuff there. Let's go to the Dow. Dow had been languishing under the 200-day moving average for weeks, but got back above it today. And also battling right around this 34,000 level. That has been a key. It was support all through here. It was resistance back here. And now we are here again. Price has memory. Let's see what happens as we battle this 34,000 and then coming into the declining 50-day moving average also. Now let's go to the problem children, mid caps and small caps. Uh, Failed at the 21. These are mid caps. Failed at the 21 last week, and then ugly day Thursday and Friday, rallying back into the declining 21. Changing character would be if mid caps get back above the 21-day moving average. Same thing with small caps, which failed twice there last week, and still some distance between that and the 21, but it's coming down quickly. Relative strength continues to be well below average on these stocks, but we're always looking for green shoots. Right now, we've got some positive action in large caps. We want to see mid caps and small caps join that party. Let's go to the VIX. VIX had a big up move on Friday, big down move today, down 10.9%, right around the 21-day moving average. Let's see what happens when it meets that level tomorrow. Ideally, we want it to get back below this 15-16 level. That's where the market has done its best work this week, or this year. Let's go to the dollar. The dollar 3 days up after bouncing off the 21, pull back today. We've seen the inverse correlation between the dollar and gold and silver uh, weaken somewhat. Let's go to gold stocks. Very strong, even with the strong dollar last week. Inside day today, digesting some of that move. That's actually what you want to see after a decent move up, is a little bit of consolidation. So gold down 0.5% today, silver down about 0.5%. Same thing, inside day consolidation. Gold stocks, GDX, we use as the index, second close above the 50-day moving average and a positive close. So weak dollar today, uh, and a strong dollar recently, but gold and gold stocks have rallied and didn't really care. Also for the second day, uh, second straight day, yields were down on Friday, but stocks were down. Today, yields were up and stocks were up. So, is that inverse correlation separating a bit too? Could be seasonality overriding the correlation between stocks and bonds. We never know for sure. We take our cues from price and volume and try to detect patterns. And right now, broad bond uh, index BND ETF ran into the declining 21-day moving average and was rejected at that level. So second out of 3 days down on the broad bond index TLT. This is the long bond. Second day out of three down again, declining 21-day moving average. Last week is where we paused here. On the other side, rates, TYX, up strongly today, 1.8 since the bounce off the 21 on Wednesday of last week. Same thing with the 10-year, the TNX up 1.8%. Also, note the support at the 21-day moving average last week. And then Bitcoin finally got a spot ETF approved today. Had initially a very big bounce and that sold off somewhat, but still up 6.61%, possibly a catalyst for Bitcoin and Bitcoin related names as they were pretty much all higher today. All right, that's our inter-asset correlation. Let's get to the tail of the tape. You can pause this. I'll hit the highlights. Positive stochastics back again on the five major indexes and the RG8. So we got good stuff there. I want to see how the NASI RSI reacted after initially rallying off of oversold and then failing with the weakness in the market last week. This gets updated at 6 o'clock. We'll talk about it, excuse me, in tomorrow night's video. Uh, so we're operating back under the bear case with the 1-day shakeout below the 21 on the S&P and regaining it today. I mentioned the news spot Bitcoin day count 4 days up, now a 3-day consolidation, 7th day above the 80 EMA, 4 out of 5 days above the 21 EMA. A 1-day shakeout we're willing to forgive when I do the day count. So four out of 5 up. Our expectations positive if those key two indexes, S&P and the Nasdaq, are above the 21 with the S&P regaining it today. Our expectations flip back to positive as well as supported by the overall positive action in leading names. Uh, 11 out of 11 sectors up today. Couldn't really find much weakness anywhere. Bitcoin and Bitcoin stocks, banks and retail led to the downside. Just a little bit of weakness in gold and silver, the dollar, bond prices, and oil services. As far as the portfolio goes, NVO, one of the weight loss drugs, we took a position in that today. And then with the reclaim of the 21-day moving average, we added back the half UPRO position that we sold on Friday on weakness. So that raised our beta back above the level of the S&P 500, going from 0.95 back up to 1.02. Bottom line on the day, broad rally despite yields up. NASDAQ regained the 50-day, S&P regained the 21-day, Dow regained the 200-day. Right above here, this 43.74 where we closed today. We've got that 43, we'll round and call it 85-ish resistance area, and then right above there, they got the 100-day moving average, which is still raising by 2 points a day. But coming down there, 44.02, we've got the 50-day moving average. I need to move this down, actually. So that's what we'll be keeping our eye on throughout the balance of the week. Let's take a look at a couple of key names in the portfolio, and we can see how they bounced back uh, or actually did even better. Start with one that was weak today. Palantir gap down, undercut the 8, but closed back near the highs of the range. And all this really did was come back to this little shelf area, normal pullback. We're still underwater 4% on this on a small 1.5% position, but it exhibited the leadership characteristics from a relative strength standpoint. Also, the earnings growth that we're looking for. So also has that military intelligence component. So we're keeping an eye on this, and it certainly has the potential to act well. I mean, look how it ran back here when the market was rallying. Next up, let's go to NVO, which we added today. Big move up on positive news last week. They upped their margins on Friday, pull back today, but held that key 100 level, which was resistance over here. So now forming a nice cup, great volume patterns. Earnings in 3 weeks. Lilly, it's got has a weight loss drug that's acting great too. Lilly also seeing great things out of those weight loss drugs. So getting back into that field today through NVO. VRT had a rough day on Friday, but held the 21. Really, it was a failed breakout, but not a to the standpoint that it hit the pivot minus 7%, which is this pink shaded area. It held the 21 and bounced nicely off there today, regaining its pivot at 40.41. Zscaler had a good day today, up 2.19%. So it's consolidating this breakout level around the 167.50-ish level. Our other cybersecurity play, CrowdStrike, also a decent day today, consolidating nicely also above its breakout level, up 1% on the day. Not necessarily a standout. Nutanix, which has showed great relative strength on up days and also not giving it back, had an underperforming day today, but volume was 20% below average, and it's still well above the breakout area. So that's acting fine also. DFIN, this is ITA, the leveraged ITA, pulled back, bounced off the 21. Let's go to ITA. Really, we should always show the underlying, but bounce off the 21 day, some follow on strength. Boeing is dragging this down, but Northrop Grumman and GD were down slightly today, but some other stocks in the group carried the weight for it today. And of course, we've very clearly got the risks in Russia, Ukraine, and the Middle East. NRGU oil, this is how we're playing oil, that continued to show strength following to upside highs since we repurchased it. Our interest rate play, TBT, gapped up today, held the gains. That's a way to play higher rates and also somewhat of a hedge. DRV, which is the inverse of 3 times real estate. Real estate got back above the 21 today. We're using the high from last week as our stop level. So we're down slightly on DRV. And then we added back to UPRO, and we still have our SSO position, which are leveraged positions against the S&P 500. We're tracking the S&P 500, purchasing that half that we sold on Friday with the regain of the 21 EMA. So again, we'll be looking at this key area above these levels, and then on a pullback, watching the 21-day moving average as we have 4 days up. 1, 2, 3, 4 days up, and now a 3-day consolidation of those gains. And with that, I'm going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. It's not how much you make in the markets, it's how much of that you can keep. That's our mantra. That's what we strive to do, is keep our finger on the pulse of the market, see where it leads us. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. And with that, I'll wrap up the video for Monday, October 16th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.